Today we're going to talk about Trevena. Why? Because it's cheap and it actually has a real shot to take off. Over the past few months, there have been whispers across the web talking about a possible product getting authorized by the FDA. Now, as we know, this kind of news is very bullish for a company like Trevena in the pharmaceutical field. If you have just read about the stock on the internet and want to check out whether the stock is worth your time and money, or if you already have a position in it and want to have an opinion about whether the stock is worth holding, then this video is for you. Please keep watching till the end because we're going to talk about if you should buy it, how much shares you should buy, and under what circumstances you should maybe consider dumping some of your holdings. The company makes painkillers. In a recent newswire, they said that they're now focusing on selling this new product called Olinvic. The advantages of this medicine includes cheaper cost and even cheaper cost still for higher risk patients because of how it's made. Those aspects are important, I would say, and are very sensitive to the ears of movers and shakers within the industry. We all remember how big a mess it was with Purdue. Essentially, it makes a push for hospitals to make the switch to them instead of traditional morphines. So that is the fundamental reason why the stock is part of the conversation. They have a product that they want the FDA to approve. And this is something that's huge for pharma startups. Alright, so let's take a step back and see what's what. First of all, the company. I think that Trevena has a real potential to take off because for all pharmaceutical companies, everything depends on whether its product can get commercialized. Once it did, it's the gold mine. Some of the indications that this company does have a real possibilities is in the shareholders' composition. Trevena has some long-time shareholders who, in my mind, can be considered as token of legitimacy in the trust of the financial market in the company. Household names like Vanguard, BlackRock, and Goldman Sachs. The other important aspect to pick up is that all those institutional shareholders that we just talked about have been in the capital of Trevena back in 2014-2015 period. Way before when the stock became a topic of conversation amongst the retail traders. That is a double-edged sword. On one hand, it means that they have been putting their faith in the company for a long time. On the other, it kind of shows how volatile the sector can be, and sometimes the reality is like a wall that hits you. Especially considering that since that period of time, Trevena's stock fell by almost 80%. Now, the other thing to think about is the overall market sentiment. I think that the market is shying away from additional risk at this current point in time and wants to park their money somewhere else and wants to see who blinks first in this game of bluff and then pick up the pieces afterwards. Alright, so how can I say this? There has been a theory circulating amongst investors that doesn't always get verbalized, but is certainly in the mind of many. I would say that if you're watching this video, it probably has been in your thoughts for some time as well. We have been playing this game of financial Jenga ever since the beginning of the pandemic because we collectively don't want to collapse. We decided to just not look down and start climbing up. But the current situation is almost like the guy climbing has decided to take a peek for half a second at the abyss below and is now having like a huge vertigo. That is, in my opinion, the state of the market at this moment. It climbed so much back in 2020 because it didn't want to bite the dust. And now it's reevaluating whether this is a smart move and if it should actually take a long break. The stock price chart that you're watching right now isn't just the price evolution of Trevena, but it's the overall trend of the market. And from the looks of it, the price correction is still ongoing at the moment. The third element is to think about how much you're currently holding in your pocket. The reason I bring this up is because depending on how much Trevena shares you are currently having, will determine if you should start unwinding some of your position. I would personally buy no more than 1% of my portfolio in this stock, and that's in multiple batches. That is how much I am willing to risk in Trevena, at least in the current stage of things. If you currently have more than 3% of your portfolio in it, I would recommend you to start hedging your risk exposure in this company. There are two main ways you can do this. One is to sell your shares, the other one is to sell call options. Personally, I think that selling call options is a better alternative because if they expire, you can rinse and repeat the same procedure over and over again. The trick is to try to aim for out-of-money strike prices, so that those who buy your contracts will never see the price high enough to exercise them. For those who don't have any holdings in it yet, I would recommend you to start watching this stock and even build a small position to keep it rolling. Nothing crazy, just a tiny bit, like a tenth of the allocation that you're willing to put in. As soon as the price shows some support, I would recommend you to buy in bigger quantities. Thanks for watching. If you like my content, please like, comment, and subscribe to my channel.